this daily market commentary for Friday, July the 5th, 2019, and incorporating a little bit of weekend price action from the crypto markets for the 6th and the 7th. Hope everyone had a good weekend and are ready for a new week. So what did we have to finish the week last week? Well, the July 4th holiday in the US brought a general lull to all markets, with even crypto taking a back seat. But as soon as the new Asian day got going, that would change. Bitcoin dropped rather unexpectedly from around the 11,700 level to 10,600, and ETH dropping from 295 down to 280. As is often the case, there was no real obvious reason, but the dip was fairly short-lived, and by the time the New York day got going, Bitcoin was back above 11,000 and ETH back up to 293. The weekend session saw the usual choppy price action, but late in the day, Sunday, ETH finally rallied back above $300 up to a high of 310, and Bitcoin followed suit, rallying up to 11,560. Should be an interesting week ahead to see if the major coins can challenge their highs from 2 weeks ago, or if we are in for a further period of consolidation. The FX markets on Friday had a singular focus, as did the interest rate markets and equity markets, and that would be the US non-farm payroll data. The headline number came in stronger than expected at plus 224,000. The unemployment rate did rise up to 3.7%, but this was due to a higher participation rate. The Canadian employment data was released at the same time, showing a slightly weaker number at down 2,200, with the market looking for a rise of 10,000. So what did all this mean? Well, remember, we've had a backdrop of lower interest rate expectations with high hopes of a Federal Reserve rate cut towards the end of July. However, being the Fed data dependent, this better than expected number would dent those hopes. As you might expect, US interest rates would rally on the back of the stronger number, with the US 10-year yield back up to 2.04%. In turn, the dollar would rally strongly, with dollar yen reaching a high of 108.63 and euro down to 112.08. Sterling would also drop, hitting a low of 124.81. Dollar CAD rallied up to a high of 131.36, and Aussie US dropped down to 0.6958. So you get the picture. To start the day, at least, the dollar is king. However, what might be more surprising is the reaction of the US equity markets. While you might think the market would celebrate the good data and the return to stronger job growth, instead it focused on the negative, namely the reduced potential for a rate cut. Initially, the Dow Jones dropped over 200 points, but as the market began to take a more balanced view of the data a little bit later in the day, the Dow rallied back to being down only 43 points at the close, with the S&P and NASDAQ following similar paths, both closing down by less than 0.2%. From an FX perspective, the dollar remained firm into the end of the New York day, except against the commodity currencies, with dollar CAD dropping back down to 1.3075, and Aussie rallying back to 0.6980. Kind of a risk-on play there with the equity markets rallying back. For gold, the double whammy of both higher interest rates and a higher dollar on the day saw the yellow metal close back down to $1,400 an ounce. From a technical perspective, I thought I'd take a quick look at the currency of my home country, sterling. Cable has been embroiled in Brexit uncertainty for over 3 years now, and with the new Prime Minister to be announced soon, we are still no nearer a comprehensive solution. Bearing in mind the uncertain background and now a potential reversal of the recent dollar weakness, the downside for sterling becomes ever more vulnerable. And if we look at the daily chart I have up here in front of you, we can see on Friday we came very close to touching the low from December 2018, around the 124.80 level. And beyond there, only the January 2019 low of around 124.20. As you can see over here, really offers any meaningful support ahead of the 120 level, which was last touched back towards well, January 2017. So, yeah, quite a long time ago. Depending on events this week, I would definitely pay very close attention to these particular levels here, especially the 124.20 level, and the potential consequences of a break below there. In the interim, you would expect it to be good resistance back up towards these levels here. I'm pointing out on the right hand side, up towards 128 figure. So those are level to watch for sterling. Now I know this is a bit of a big picture view, but given there are so many different things affecting sterling at the moment, I thought it was worth taking a look. And with that, I wish you all the very best of luck for the upcoming week, and great success in your trading. I look forward to speaking to you tomorrow. Cheers.